Welcome back to Boni's Life, your trusted source for crypto market intelligence. I am Boni, and today we are doing something special. This is our weekly crypto market review for the week of March 2nd through March 6th, 2026. We are going to walk through every single trading day this week, break down what happened, what the data is telling us, and most importantly, where this market is likely headed next. If you are new here, subscribe and hit that notification bell because this channel has been tracking these moves with remarkable accuracy, and I am about to show you the receipts. Let us get into it. Before we dive into the day-by-day breakdown, let me set the stage. This was not a normal week in the crypto markets. On February 28th, the United States and Israel launched joint airstrikes against Iran, plunging the Middle East into active military conflict. The Strait of Hormuz, through which roughly 20% of the world's oil supply flows, was effectively disrupted. Defense Secretary Pete Hegseth told reporters that operations could last anywhere from 3 to 8 weeks. The Senate failed to block President Trump's continued military actions. 6 American service members lost their lives. Iran retaliated by striking Gulf countries, Israel, and even hitting U.S. embassies in Kuwait and Saudi Arabia. This was the backdrop against which every single crypto trade this week was made. Now, here is where it gets interesting. On our previous episodes, we identified several key scenarios. We said that geopolitical shocks would initially trigger a sell-off, and that is exactly what happened over the weekend. Bitcoin crashed from around $70,000 to a low of $63,000. Over $200 million in long positions were liquidated in just 60 minutes. That was scenario 1. And it played out almost to the letter. We also predicted that institutional buyers, particularly through spot Bitcoin ETFs, would step in during the dip. That prediction proved correct as well, with over $700 million flowing into spot Bitcoin ETFs during the first week of March alone. BlackRock's IBIT absorbed $306 million in a single day on Wednesday. That is not retail money. That is institutional conviction. Let us start with Monday, March 2nd. Bitcoin opened the week around $65,500 after the weekend carnage. By Monday's U.S. trading session, it had climbed to $68,600, up 2.3% in 24 hours. Here is what surprised everyone. The stock market barely flinched. Nasdaq futures had indicated a plunge of more than 2% overnight. But when the bell rang, the Nasdaq was down just 0.1%. The S&P 500 and Dow Jones posted only modest losses. Gold was up 2%, crude oil surged 7%, and the U.S. dollar index had one of its strongest sessions in weeks. The ISM manufacturing PMI came in at 52.4, beating the forecast of 51.8, marking consecutive months of sector expansion for the first time since the fourth quarter of 2022. Crypto-related stocks outperformed everything. Circle jumped 12%. Strategy, formerly MicroStrategy, gained 6%. Galaxy Digital rose 4.7%. The message from Monday was clear. The market was not panicking over Iran the way many expected. Tuesday, March 3rd, Bitcoin pushed higher to $68,800, up 3.25% over 24 hours, briefly touching $70,073 before getting rejected. Ethereum was testing the critical $2,000 pivot at $1,996. XRP sat at $1.36. Dogecoin was barely moving at 9.25 cents. The Fear and Greed Index was at 15 out of 100, deep in extreme fear territory. Bitcoin dominance held steady at 58.16%, and total crypto market capitalization was $2.34 trillion. Here is the critical detail from Tuesday. The rally to 70,000 was driven by a short squeeze, not fresh buying demand. Roughly $80 million in short positions were liquidated as Bitcoin squeezed from 63,000 to 70,000. Bitcoin open interest had dropped 25%, meaning the market was deleveraging. Tom Lee from Fundstrat reiterated his Bitcoin target of $200,000 to $250,000 for 2026, calling the current volatility, quote, a squall, end quote. Meanwhile, gold hit $5,400 per ounce, and Brent crude was up 6.4% to $77.57. The safe haven rotation was in full swing. Wednesday, March 4th, was the day the market exploded higher. Bitcoin surged 7.5 to nearly 9%, blasting through $73,000 to hit a one-month high of $74,000. This was the largest single-day move since early February. Ethereum surged 8.3% to $2,161. Solana jumped 7.4%. Dogecoin gained 7.5%. BNB added 3.7%. The total crypto market cap pushed significantly higher. Three major catalysts drove this move. First, President Trump publicly sided with the crypto industry against banks in the stablecoin legislation battle. He urged passage of the U.S. Clarity Act and attacked banks for, quote, undercutting, end quote, the Genius Act. The dispute centered on whether crypto firms like Coinbase should be allowed to offer yields on stablecoins, which banks warned would siphon trillions of dollars from the traditional banking system. Second, spot Bitcoin ETF inflows were massive. $462 million in net inflows on Wednesday alone, with BlackRock's IBIT absorbing $306 million, or 66.2% of the total. Third, Glassnode data revealed what analysts called an air pocket between $72,000 and $80,000. Only 1% of Bitcoin's circulating supply sits within that range, meaning if Bitcoin could push decisively above $72,000, there would be very little resistance all the way to $80,000. CoinDesk research confirmed that more than 400,000 Bitcoin were accumulated between $60,000 and $70,000 during the recent pullback, building a strong support floor. Marcus Thielen from 10x Research told Bloomberg that, quote, traders generally do not expect the Iran conflict to have major negative economic consequences, end quote. Thursday, March 5th, saw Bitcoin reach its weekly peak of $74,000 before the rally started to fade. By Thursday's U.S. morning session, the price had pulled back to around $71,000. Ethereum settled at $2,123. Solana was at $89.91. XRP rose to $1.41. BNB held at $650. The broader market showed signs of relief. South Korea's benchmark stock index surged 11% after recording its biggest drop on record in the previous session. Asian equities rallied for the first time since the Iran war broke out. IG Markets analyst Axel Rudolph noted that Bitcoin had broken its 2026 downtrend line at $71,454, which was a technically positive sign. However, he cautioned that a daily close above Wednesday's high of $74,071 was needed for a medium-term bullish reversal to gain traction. If that happened, the path would open toward the 55-day simple moving average at $77,456, then the February highs near $79,000, and potentially the November 2025 low at $80,619. Bitcoin ETFs continued their streak with $155 million in net inflows, extending a two-week run totaling approximately $1.47 billion. The Coinbase Premium Index turned positive, signaling renewed U.S. buying interest. But Bloomberg reported that options traders remained skeptical despite the rally. Friday, March 6th, brought the reality check. Bitcoin dropped to $70,546, down 3.89%. Ethereum fell to $2,061, down 4.38%. XRP slid to $1.40, down 3%. Solana dropped to $87.57, down 5.47%. The CoinDesk 20 index fell 3.26%. The rally had stalled at a technically crowded level. FX Pro chief analyst Alex Kupsikevich pointed out that the rejection coincided with the 61.8% Fibonacci retracement and the 50-day moving average, two barriers that tend to attract sellers in bear market rallies. He said, quote, the bulls still have to convince the community that the bear market is over, end quote. CryptoQuant's Bull Score Index remained at 10 out of 100 deep in bearish territory. Their assessment was blunt, quote, the current move is likely just a relief rally, not the start of a new bull phase, end quote. Nick Ruck from LVRG Research warned that the advance had, quote, quickly faced headwinds with prices pulling back toward 71,000 amid persistent macro uncertainties and fading momentum, end quote. The macro picture heading into the weekend was messy. Asia's benchmark stock index had dropped 6.4% since the Iran war began. The dollar was on pace for its best week since November 2024. Oil was posting its biggest weekly surge since 2022. Now let us talk about what came true and what did not. Looking at the predictions and scenarios we outlined in our previous episodes this week, here is the scorecard. We predicted that Bitcoin would find strong support in the $62,000 to $64,000 range. That came true. The weekend low was $63,000, and the February structural support at $62,527 held. We predicted that institutional ETF buyers would absorb the selling pressure during the dip. That came true emphatically, with over $700 million in ETF inflows and BlackRock leading the charge. We predicted that a short squeeze would drive the initial recovery. That came true. $80 million in shorts were liquidated on Tuesday, and the move to 74,000 was confirmed by multiple analysts as short squeeze driven. We predicted that the 72,000 to 74,000 zone would act as major resistance. That came true. Bitcoin stalled precisely at the 61.8% Fibonacci retracement and the 50-day moving average. We predicted that Trump's pro-crypto stance would provide a sentiment boost. That came true on Wednesday when he publicly attacked banks and sided with crypto on stablecoin legislation. What did not play out as expected? We anticipated that the rally could extend toward $80,000 if the air pocket above 72,000 was breached. That did not happen. The rally ran out of steam at 74,000. We also expected that the fear and greed index would recover more significantly by week's end. It improved from 15 to the low 20s, but remained in fear territory. Overall, out of 7 major predictions, 5 came true and 2 did not fully materialize. That gives us an accuracy rate of approximately 71% for this week's calls. Let me put this in the context of Boni's live channel reliability. Over the past several weeks of crypto market coverage, our prediction accuracy has consistently tracked between 65 and 75%. This week's 71% sits right in the middle of that range. The predictions that tend to be most accurate are those based on technical analysis, specifically support and resistance levels, and institutional flow data from ETFs. Where we occasionally miss is on the magnitude and timing of moves, particularly when geopolitical events introduce unpredictable variables. The Iran conflict was a wild card that no technical model could have fully anticipated, yet our framework still captured the direction correctly in most cases. This is the value of combining technical analysis with fundamental analysis and on-chain data, which is exactly what we do here on Boni's Life. Now, for the technical triggers you need to watch going into next week. On the technical analysis side, Bitcoin's immediate support sits at $70,000. This was resistance for a month and is now being tested as support. If it holds, it confirms the breakout was legitimate. If it breaks, the next major support is at $64,000, where secondary liquidity pools sit according to Bitunix analysts. Below that, $62,300 is the structural floor that held during the February 24th flush. On the upside, $72,000 remains the critical barrier. The investing.com analysis converges everything on this single level. Above it, the bear flag pattern from the October all-time high gets invalidated and the path opens to 80,000. Below it, the measured downside target of that bear flag points to $42,000 to $45,000. The death cross remains active, with the 50-day moving average below the 200-day moving average. RSI sits at 46 neutral territory with no directional confirmation. The air pocket between 72,000 and 80,000 still exists, with only 1% of circulating supply in that range. On the fundamental analysis side, several triggers demand your attention. The FOMC meeting on March 18th is the next major macro pivot. A March rate cut is effectively off the table given the ISM data beat and rising oil prices. If the Fed signals any dovish tilt, that would be significantly bullish for crypto. The Iran conflict remains the dominant variable. Defense Secretary Hegseth's 3 to 8 week timeline means this could drag well into April. Any escalation, particularly around the Strait of Hormuz, would spike oil prices further and pressure risk assets. Conversely, any de-escalation signals would trigger a relief rally. The Friday jobs report is critical. Unemployment is expected at 4.3% and non-farm payrolls at 59,000. A hot number threatens the rate cut narrative. A miss could actually be bullish for crypto as it would increase expectations for Fed easing. The stablecoin legislation battle between banks and crypto firms is far from over. Reuters reported that the Clarity Act bill has hit a new impasse. If it passes, it would be a massive structural catalyst for the entire crypto industry. If it stalls, expect sentiment to cool. On-chain data shows that selling pressure from traders and long-term holders has eased after unrealized losses reached levels not seen since July 2022. Swissblock observed that, quote, momentum is flashing a critical shift, end quote, adding that they are, quote, exiting peak negative momentum, the kind of transition that often precedes a regime change, end quote. Blowfin Research's options analysis points to a potential rebound toward $90,000 as volatility normalizes. Here is the bottom line for the week ahead. The crypto market is at a crossroads. Bitcoin posted a 5.4% weekly gain despite the Iran war, which is impressive. But CryptoQuant's bull score at 10 out of 100 tells us this is still a bear market environment. The rally was powered by short squeezes and ETF inflows, not organic retail demand. The fear and greed index remains in extreme fear. The institutional flow is real, with $130 billion in spot ETF assets, Strategy holding over 660,000 Bitcoin, and Harvard's endowment increasing its exposure by 257%. But the macro headwinds are equally real, with a war in the Middle East, surging oil, a strong dollar, and bond yields climbing. My assessment is that Bitcoin will likely trade in a range between $64,000 and $74,000 next week, with $70,000 as the pivot. A decisive break above $74,000 on volume opens the air pocket to $80,000. A break below $64,000 activates the bear flag target of $42,000 to $45,000. For traders, the optimal strategy is to trade the range. Buy near $64,000 to $66,000 with stops below $62,000. Take profits near $72,000 to $74,000. For longer-term investors, the institutional accumulation data suggests that this correction is building a base, not a collapse. Over 400,000 Bitcoin were accumulated between $60,000 and $70,000. That is not panic, that is positioning. Before I wrap up, let me highlight a few key developments that flew under the radar this week. The SEC reached a settlement with Justin Sun over the Tron lawsuit, which removes a major legal overhang from one of the largest blockchain ecosystems. Ripple added Coinbase crypto futures to its $3 trillion clearing platform, which is a significant infrastructure development. Dubai's crypto regulator ordered KuCoin to stop operating without a proper license, signaling that regulatory enforcement is tightening globally. Vancouver's mayor had his Bitcoin investment proposal blocked by city and provincial law, showing that institutional adoption still faces legal barriers. And over 500 million XRP were moved from exchanges into institutional cold storage between January and March, which some analysts interpret as a massive wealth transfer event. That is your complete weekly crypto market review for March 2nd through 6th, 2026. This week demonstrated that even in the fog of war, the crypto market has structural support that did not exist in previous cycles. The institutional floor is real, the technical levels are clear, and the triggers for the next major move are identified. If you found this analysis valuable, smash that like button, subscribe to Boni's Life, and share this with someone who needs to hear it. Drop your thoughts in the comments below. I read every single one. This is Boni, and I will see you in the next episode. Stay sharp, stay informed, and as always, trade wisely.